All right, guys. Hello. Let's not waste any time. Welcome to Wednesday, the 18th of March, and you're getting a trade recap. Okay, so we took another loss today. Um, let's dig in. So, economic calendar, loads of news today. Okay, Fed rate, FOMC, PPI in the morning. So it's definitely a time when to obviously avoid trading, right? On the daily, we can see the price is trying to break out higher now, right? Price is trying to break out higher out of this gap. Okay. Um, Given that we are in a consolidation on NQ, right? We can see we're in a consolidation. But ES is printing lower. It could just be moving back into equilibrium, okay? ES doesn't look much like a consolidation. We were very close to taking our previous week's range low, which is this low right here, but we failed to, right? Previous daily candle does not get closed above, right? So it does not get closed above. So the market is quite uncertain, right? We're moving higher. We're in this gap. We don't know what's going to happen exactly, okay? 4 hour, we can see price respecting higher prices. So down close, up, taps into the down close, moves higher, right? Same thing here, down close, moves higher. We have two bullish gaps that haven't been tapped into yet, right? Next thing here, we have the hourly. So I was interested in seeing what happens with regards to this internal high, right? Intermediate high, sorry. So we have this hourly up, this is an intermediate high. And what could we see happen? Okay, could we get a sweep and we get a decline, or what's going on, right? 1 hour continues to show bullish price action though. So we have this bullish gap that price reacts off of and moves higher. Okay. Now pre-market open, we move higher. You could also argue that there's a little dip lower into this 15-minute gap and we expand. Okay. London session declines into this bullish gap. Okay, and then it gives that reaction of higher, right? If price does respect this level, we can see London reversal, New York continuation. Okay. Well, my PC's lagging. What the hell? We can see that we get a nice sweep, okay, of this high here, right, which is the same one here. So we get a nice sweep on intermediate high on ES with Enki displacing through it a little bit more, right? There's normal happens in time assets. This is also a level to pay attention to. Now, 15-minute shows weakness. Why? Well, price side here, SMT, right? This could void the London reversal idea and begin to push us lower. Note that this could also be a thing where price wants to candle close into the gap before moving lower, right? Price has been moving higher for the past 2 days though. This is what's current, okay? This is what's current. The gap forms on the 4 hour, right? Since the closing candle forming the gap was an indecisive candle, it could be likely that we tap back into it, okay? Interestingly, after we sweep this intermediate time high, right? Here it doesn't look like a sweep, it looks like more a displacement, but we sweep through it on ES, and then we get a decline, right? It reaches into internal liquidity, right? So if we displace lower through ES's 4 hour lower gap, we can see a fuller, sorry, if we displace this one, we can see a draw into that one, okay? What do we see happening? We get that, it declines into that lower gap, okay? We also seem to be getting a bullish candle out of it on NQ. So A13 uses what he calls this significant move down. Now, market opens, and what I'm anticipating is a bullish run to correct the news manipulation. Now, one bad thing here, I'm spotting straight away, I'm trying to predict the market. Okay, I shouldn't even have said something like this. I should have just waited to see what price offers. Okay. Ever since we reached into this gap, we've been consolidating. Okay. I want to see a reaction move either higher or lower. I'm anticipating higher prices to fill in those bearish gaps. Now, bear in mind that we have been moving lower. Okay, we have been moving lower. One thing I've also noticed is that we had a 5-minute SMT at the swing high here, right? Which could have given reason for a possible entry. We come into a 15-minute, we come in and retrace the 15-minute gap, which is this one here. We come in and retrace it. Or I need to turn off my phone and this fucking Twitter shit. Sorry. Filling it in before moving lower. Only thing I'm really sort of trying to understand here is, will we begin to move higher soon, or are we looking bearish now given that news created this decline, right? So we have this massive decline. Is price going to continue this decline, or are we going to start reversing? We get a 5-minute SMT higher, right? Some displacement, okay? Now, this was the entry idea. So we have a displacement through, we have a change in state delivery, we have a market structure shift, okay? The target is intermediate high at the bearish gap that the 15-minute made. If we reach into the next recent bearish gap that we have right now, I'll avoid the entry. And what does it do? It reaches into like a 15-minute gap in which I avoided it. Okay. After this, I took a short. Okay, I took a short. Now, what happened was it felt a bit rushed, but what we had is, first of all, straight away we can see this is not a high quality setup. Why? Because why am I drawing my range from here to here if my entry was on a 2-minute gap? Okay, the range should be from here to here. All right. At this point, my entry point would have been here. Okay, not here. Okay. I'm saying it feels like a bit rushed, but the market is respecting lower prices at the minute, right? Well, that wasn't really true because 2-minute, bang, we had a rally off higher. Okay. But overall, we were moving lower. That is the correct thing to say here. Okay. Unless my previous entry idea was correct and I was impatient, aka this one here, which it was wrong. We get a sweep of the intermediate time high, which is here. Right here, we get a sweep of the intermediate time high. This one, bang, we sweep through and we begin to decline. Okay. Price delivers lower, breaking a significant low, which was this one, but we can see it's not even severe. Okay, it's not severe. On ES it is, on NQ it's not where it's at the entry. And we have all the other confluences lining up, which was true. Apart from obviously the fib and the discount because that was incorrect. So it's actually wrong. Entries on a 2-minute bearish gap targeting those previous lows made. One way I do see myself getting stopped out is due to the fact that the bearish 1 hour gap has not been tapped into yet. So let me actually, I don't know if I deleted the annotations, but at the decline, we began to start having these bearish gaps, okay? So I was thinking price may want to reach back up into them, okay? Yeah, and this could be the catalyst for a move lower, okay? So we have a retracement, so something, let me just draw it out. It could be something like this, where we go bang, 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 okay? But we see that actually does not end up happening, right? Or it could have been a possible just straight reversal taking out these highs here, okay? So that's that. I want to start journaling the risk to reward as well because I think that's quite important. So what happens is it looks to me like ES is delivering better price action. Okay, so we're getting this gap filled in and then we're moving lower, and stuff like that. Whereas NQ is kind of hovering within more of my stop loss region. Okay, I'll keep myself on the lookout for the trade as it could be a point of patience again. And what does price do? It stops me out. Okay, it stops me out. Now, lessons learned. I have a lot of notes because this was a day that's quite important to annotate. So psychological reasons for a poor trade, right? For today's trade, it was rushed. I had an emotional rush when entering the trade, as if me missing this trade would have been the end of the world. I had a lack of patience and negligence, and I was negligent of the high time frame to provide for a clear sign of direction. Right, the high time frame was moving lower. Okay, that's the truth. The high time frame was moving lower. And the next thing, we had obviously 2 back-to-back losses now, which doesn't feel great psychologically. However, it's not like I'm really upset, you know. It's like a more of a kind of, it's motivating me more to lock in, right? And you also gotta understand it's part of the game, and it's a game of long-term success, not short-term, right? Anyone can show you winning 10 trades in the past 10 days, but if they show you on a 3-month scale how many trades they've won, if it's an overall loss, what are you gonna think? You're gonna think, all right, well, what you're kind of telling me right now is pointless. Okay, it's all about the long term. Technical reasons for a poor trade. We've been moving higher since we reached the internal liquidity, right? However, the lower time frames could be chopping in a bit of a larger range. But regardless, we are slowly moving a bit higher. The market is bound to remain uncertain for the time due to FOMC and Fed rate coming out soon, which is at 2 p.m., right? And this trade was taken at around 11:45. Was it? No, 11:30, yeah. Which is just before lunch. We still have those gaps that price will eventually want to come and fill in, whether it be today, tomorrow, doesn't matter. London reversal new continuation could still hold. However, it is definitely not until those hourly gaps are retraced back into, okay? This could mean a perfect opportunity could have presented itself during York PM. I wouldn't break my rules and obviously take a trade, more than one trade at 1% risk. I feel like I have been breaking that recently as my, basically, obviously, since when you lose, on a base account balance of 10k, you lose, it's going to be 9,900. Okay, and then it's going to be 9,800 and what 11. Okay, I think no, 9,801, right? stuff like that. And I'm constantly risking £100, which means I'm risking more than 1%, right? It's all about compound. This will stop and we'll trade at the contracts the calculator gives me, whether I like it or not. We do not get an SMT, right? Now, SMTs are not always guaranteed, and that's fine. However, they do help as an additional confluence. It's better to wait out and look for them rather than not. They tell you that there is weakness on one side of the asset, potentially foreshadowing a reversal, okay? It's super easy to follow rules, and I went and rushed to take a trade that did not offer an SMT. Another thing is that on the asset that I took the trade, the displacement on the swing low was not that significant. So we can see here on the picture, not that significant, but this one was more significant, okay? Given this, although the trade did not end up going my way, it would have been better to take it on ES anyway, right? Okay, would have been way better to take it on ES. Given this trade, I do want to pay attention to the direction the market goes to now. If it was a stop hunt, then that creates a lesson on stop loss placement, setup quality, and patience. Okay, if it ultimately ends up reversing, it is due to a lack of rereading price action clearly and trying to predict the market rather than anticipate what I will do. I did this anyway. Okay. It will also be due to a lack of patience and are waiting for price to provide better information with regards to its intended direction. Now, this is the update of the trade. All it had to do was to refine the entry and have a better quality setup, okay? What does price do? So price has this market structure shift, okay? And then what do? We tap into this 2-minute gap, okay? We sweep this intermediate term high, we tap into this 2-minute gap. We do not tap into this one, but on NQ, where I would have taken my original trade, we tap into this one here, right? We can see that we get tap in here, right, above premium. Even this market structure shift is not valid, right? We do get a change of state delivery. What does price do? Price retraces back up into this area and we consolidate a little bit and boom. Okay, and we reach that exact low. Now, this is the trade idea. Had I refined it more and seen that 2-minute bearish gap, I could have had a better trade. Price did consolidate at the beginning, but then ran into internal liquidity from the key level. Okay. Main thing to then take away was setup quality, rushing, patience, stop loss placement. When the market has such a violent decline during news, it does one of two things, right? It's either going to retrace, okay? So this move down, it will either retrace it or it will void out the fact that there is some sort of market profile and reach for that draw on liquidity, right? That severe draw on liquidity, which is likely to be what? This low tomorrow, this low, maybe even this low, right? So we see price comes in via not the candle, but wicks in twice into the gap, and then we get a decline. Okay. I do remember noting previously this week that the draw is likely to be lower. Another thing to mention is a high time frame narrative, right? If we're moving lower on the hourly, right, we can see that we are having big down close candles on the hourly. It is likely that we are going to continue lower. Yes, we can get a retracement, but the fact is we are still likely to move lower. Okay, not higher, right? It's very unlikely unless there is a higher time frame key reaction level that we tap into from this decline, right? Such as here, which is where I kind of got a little bit confused because I thought price is gonna run in, right? But price does this a lot. I think I've mentioned this before. Look how it will do an up close candle. It will psych people out and then it will just continue lower. It does that a lot. Okay, so that's that for today's trading session. Hope you guys learned something from it. Tomorrow, I'm actually interested. I want to see if there's going to be any big news coming up tomorrow. Unemployment claims, and then nothing on Friday. Okay, so Friday we might have like a very chill day. That's that. I'll see you guys tomorrow.